Hello, everyone. My name is Simon Misiewicz. Apologies for the slight delay of the 1 minute. My name is Simon Misiewicz from Optimise Accountants. I'm going to be hosting the event today, which is HK2UK, to help people transition from Hong Kong to the less summer climate of the UK. I have a bunch of panel members who are going to help you from all manners of aspects, from including legal, financial, taxation, which me, and finance, and even visa application as well. So let me introduce the panel members, or better still, let me allow them to introduce themselves. Natalie, why don't you make a start?
Thank you, Simon. I am Natalie Haydon-Yeung. I am an associate family solicitor at a law firm called Geldard. We are based in Nottingham, in Derby, in London, and in Cardiff. We have clients all over. We can assist you with a whole range of matters, whether that be business related or for you as an individual. So we can help with wills, purchasing properties, family matters, children matters, a whole range. So I'm looking forward to answering your questions today. Any other questions, obviously ping them across and we'll get those answered as well. Thank you.
Chenji, would you like to follow?
Hello, very glad that you can join us today, and thank you, Simon, again. This is our second session and really enjoying all the content so far. My name is Chenji Meng. I'm a wealth manager at AMG Wealth Management. We are a boutique family office providing high quality financial and investment solutions to both private clients and some corporate clients as well. We are based in Derbyshire, but have clients and offices across the country in the UK. And I think from a personal perspective, having grown up in various countries in Germany, US, China, I have a particular passion for this, helping other people, right, who are moving different places, settle down in a place in the right way. Because I have made mistakes in the past myself, not having paid taxes in the right way, having been penalized by that. I want to make sure that, the audience today, will have professional advice to avoid the mistakes that I have personally made. So thank you.
Nigel?
Thanks, Simon. My name is Nigel Smith. I'm a associate solicitor at Paragon Law. We are a specialist immigration firm here in the UK, advising clients on the full range of immigration issues, including corporate work, including work permits and investment, entrepreneur type applications, personal immigration, as well as human rights work. I lead our personal immigration team. So we deal with all matters family related and personal immigration, including matters related to the Hong Kong BNO program. I'm originally from New Zealand, and so am an immigrant myself here in the UK. I've worked in global mobility for a number of years in different countries, and for the last 15 years here in the UK. So we're hoping to reach out and be of help to Hong Kong nationals coming to the UK, both now and through the course of the next few years, in terms of extension applications, indefinite leave to remain. We also advise on citizenship issues, registration, naturalization, and the full ambit. Thanks, Simon.
Okay. And finally, Simon, I know you're in the background there, but would you introduce yourself?
I am indeed. Yeah, do excuse me, everybody. I'm currently on annual leave in Cornwall in the UK, which is quite a very popular holiday destination. However, it doesn't have the greatest of Wi-Fi connections, or at least half of the UK, those that do live there, have decided that the southwest of the country is a good place to go, and I can't seem to get enough bandwidth to get my video stream to work properly. So yeah, I've been involved in property investing for over 20 years in the UK, having done a number of projects myself, helped lots of UK investors and overseas investors invest in the UK and then find the right kind of funding for the structure that they're using. So usually I would work, and I do work with Simon here, the tax specialist, in terms of planning how you would structure your entity in terms of investing in the most efficient way. And there are no sort of, if you like, strategies that I won't have heard of, or situations I haven't come across. So really, I'm here to help everyone who sort of connects, find and get the right funding for any sort of investment they'd like to make in the UK. Handing back to Simon M.
Thank you ever so much, everyone. My name is, of course, Simon Misiewicz. I've already said that. But what I want to highlight before we get into this session is that this is a live session. So I appreciate there's a couple of people now joining on YouTube, and I see someone on Twitter as well. If you have any questions whatsoever, then please make sure that you type those questions in, and I will pose those to the panel members. And hopefully we can answer all of them, but there are going to be times when we can't. So just bear with us, because we might follow up with an answer in the next session. So what I want to do is introduce a particular spreadsheet that I think is going to be useful for you all, which is a checklist. So I'm just going to share this on the screen right now with you. So this is something that we have put together as a collective power team. I always say these strategic partners, but as you can see there, HK2UK is powered by all these great organizations. And what we've put together is a number of useful links and tick lists for things that you need to do before you go to the UK, before you do the research, before you actually move. There are some things there. Living in the UK, so once you've got to the UK, what things you need to do. And you'll notice that every section has got a useful link to it. There's so much information in here. Living in the UK, legal, financial, tax matters. There's a bunch of stuff that I think would be very, very useful to you. Now, if you've registered on the event using the links, then you will get this sent to you. If you are watching this live, please make sure that you register for the next event, which will be plastered all the way through social media, so that you can get your copy of this checklist. It's really important to get the right information at the right time. And this checklist is a great introduction to the things that we're talking about today. So if you want a high level, this is a great product for you to have. It's free, by the way. We're not charging anything for that, but we've put in a lot of time and effort. And I just want to say thank you to the rest of the panel members for bearing with me whilst I was putting this all together, but thank you also for the time and effort you put in for Hong Kongers. As I said, that this is a Q&A session, so if you see me looking down, it's not because I'm nodding off or just rude. It is just the fact I'm trying to read questions from the live as well as our forwarded email questions that we've had so far. So what I'm going to do is start the session, and I'm going to pose this to Simon Hodgson, if I may. Simon. Cecilia said, where can I get a buy-to-let mortgage from, provided that the property was cash buy and the landlord doesn't have any proof of income? Now, that's going to be pretty tough, I would have thought, for someone coming from Hong Kong to the UK and trying to get a buy-to-let mortgage without any proof of income, but any miracles there?
You would think it is not easy, that's for sure. So yeah, there are some funders out there that will do what's known as a midterm product. So it typically is only a 5-year product, but what that does is give you UK mortgage experience to then take it to a wider panel of lenders. Rates are a little bit higher to start out with, but we can still get 75% loan to value. You wouldn't necessarily need to buy cash. You could go straight in with this product with a 25% deposit. And spread your deposit around. So effectively, if you were inclined, you could potentially buy 4 properties at the same time. How's that?
That sounds very, very good indeed. Thank you very much for that answer. I've got a question from Ching Yao. It said, things to do, or what to do to improve the chances of an elderly dependent parent who does not yet have a B&O passport getting a B&O visa. Nigel, what's your thoughts on that particular question?
Right, so the elderly dependent relative, it is a route that's included in the B&O policy. These are relatives who are parents, grandparents, they can be adult siblings or adult children who are high dependency, people who need help with their everyday care because of illness, age, or disability. They need to be included in the initial application when the BNO applies. How do you increase chances? Well, the first thing to say, I guess, is that these are difficult cases to succeed in. That they really come down to what is the situation of the elderly person or the dependent person, and what evidence is there of their need for everyday care. So my advice would be to get independent medical assessments done of the situation. You've really got to show that the person needs your help every day. Not only that, but there are no alternatives for them to get help in Hong Kong. So you've also got to eliminate the possibility of them living with siblings, or of going into care, which you pay for, because if you can do that, then they can refuse on that basis. So it's a tough one, but it really does hinge on what supporting evidence that you can present at the time. And I'd encourage you to get solid independent evidence of their medical or disability situation and rely on that.
Would you have to, sorry, just to jump in here, Nigel, would you have to show, so would the siblings have to write a letter, show that they couldn't look after the elderly parent? And for example, with the care home, would you have to show bank statements confirming you couldn't afford it? Is that what would support the application?
Yes, it is down to that sort of detail, Natalie. It really comes down to to excluding the obvious options that the Home Office might see, and the independence of the evidence is important as well. So, objective evidence that there may not be facilities available, and as I say, specialists or medical evidence is priority here, over and above family members writing letters, which can help. But I don't think one can rely solely on that.
That makes sense.
Well, anything to add there, Chenji, from your side?
Oh, sorry, I was on mute. Nothing from here. Thank you.
Okay. Moving on to a different subject. This is live, so again, I just want to repeat, if you are watching this live, make sure that you pose your questions, because I can see them coming in, and I will pose them to the panel members. One question that's come up already was from Max. Max said that he doesn't know if it was appropriate for this section, but I just thought I'd chuck it in. I'm currently looking for a house in Kensington or Richmond for about 1 million. While looking for a mortgage, I'm earning £10,000 per annum and have around £500,000 deposit. The affordability calculator online just tells me I can borrow £280,000. Is it true for such an LTV? Simon, if you're listening into that, he also talks about, while I can have a 75% loan to value for buy-to-let property, how much could I borrow for my own residence? Oh, and he's put in adjustment earnings, which is Max, that's substantial saving. He's put a difference, I should say. Max has done a typo, so it's not 10K per annum, it's 100K per annum. I think that's going to significantly change what you was about to say there, Simon.
That does have an absolutely massive bearing on what I'm about to say. Okay, Max, obviously there are a number of factors other than just your income that will affect your maximum level of borrowing. But let's assume that there's nothing else in the background that will reduce the lending or the amount of lending that you can get from a lender. Potentially on £100,000 earnings, you could get borrowing up to 4.5 times income, subject to status and subject to qualification. Some of the online calculators are okay that the lenders have got. They can only be used as a guidance. Really, it needs to sort of come down to the individual documents and then letting an underwriter sort of scrutinize them. Yes, Max, but it certainly sounds like it should be possible to get something for you there as an owner-occupier.
Okay. I think that's a good advice, Max. Hopefully you can tell us if that's been useful or not. Just type that in. A question from Ching Yao, following up from the first question, was probably more directed towards myself and Chenji, really. How are different financial assets taxed in the UK? That's a big question, including equity, EFT bonds, EFTs, and closed-end investment trusts, which can be REITs or infrastructure related. Not the typical equity or bond funds. I'm particularly interested in how distributions are taxed as income, as dividends. And I've got some ideas around tax, but Chenji, from your perspective, if we're talking about financial instrument, I appreciate that you can't really give a financial advice, nor can you really go on the periphery. But from your personal experience, have you done any investments overseas, which has changed because you moved from Germany to US to UK, etc.?
Thanks, Simon. No, it's a very interesting question. It looks like, I think, was it Jing Yao? You've definitely done your homework as well in this. So the answer is, can be as simple or as complicated as it can be. The simple explanation for how investments are taxed, if investments are taxed, is how you hold investments matter just as much as what the investment actually is. So in the UK, for example, there is a vehicle called individual savings account. It's called NISA in short. And so you can subscribe up to £20,000 per year. And no matter, you can invest in various different assets, including all the different assets you have just listed in the question, the different ETFs, equity-based or bond-based, and there's no taxes at all. There's no capital gains tax, there is no dividend tax, and there is no income tax. If you don't hold an investment in a NISA, in a traditional sort of, let's say like a platform that's not inside NISA, then you'll be exposed to capital gains tax if you decide to dispose of them. You'll be exposed potentially to dividend tax if it pays out a dividend. And as you might have mentioned, for a bond ETF fund, which is mainly involved in bonds and fixed income, actually any income from that is not a dividend. It is still actually a savings income, which is taxed at your marginal income tax rate. And if Simon, again, if you have anything to add on that, that would be great. But kind of like that's the simple answer. And it can get complex because there's more vehicles out there how you can invest in, and it gets even more complicated when you're talking about internationally too. But yeah, I hope this was of help. But of course, if you have any other questions regarding tax-wise, please feel free to get in touch with Simon or myself to further clarify it. Thank you.
Chenji, that's a great answer. And I thought it was more appropriate that I would ask you that first because of your personal experience rather than a financial product provider. But and I had a couple of calls. It's not just related to Hong Kong versus UK, but we do an awful lot of stuff in regards to US, Hong Kong, UK, a mix in between that Portugal for some strange reason. And one of the fascinating things I always see about types of products is that their tax treatment in one country could be advantageous. Now, Chenji, you mentioned about ISAs benefit from this tax-free income and capital gains tax-free. But if you are American, for instance, and I know that there's a lot of Chinese from Hong Kong that are moving to the UK and then thinking about US as well. So it's really pertinent. I've seen a lot of that going on recently. And you have to be very careful when it comes to tax planning because it could, you don't suffer any Hong Kong tax. Let's be fair. Hong Kong authority doesn't seem to want to tax you on anything, quite honestly, anything to do with foreign. But when it comes to the UK tax, yes, the NICE is tax-free, but if you go to America, it's then taxed on full income. There's no tax-free allowances whatsoever. And why should the IRS give any tax alleviance on a UK investment? But then the same applies if you have a life insurance product that's in Hong Kong, then it's not naturally going to be just taxed on capital gains tax. There may not be the same tax reliefs or some of the benefits you got from Hong Kong because we might tax it differently. And one particular product, so we looked at today with the clients, their tax in Hong Kong would be CGT, which there's no tax, so that's benefit for them. But because we transition it differently into the UK, then it's income tax. And then all of a sudden it changes the dynamics of, well, okay, what do we do with this investment? Obviously, I can't give the specifics on this call, but on this session. But it did lead to a really interesting debate to say, well, who owns that asset? How do we bring the money in? Do we be taxed on worldwide income? Because that's the other side of this is if you have investments in the UK, you've got to think about the tax planning there, but you might have investments in Hong Kong. And if you don't bring the money to the UK, then you may not get taxed on it at all if you use the right remittance basis on your tax return. So it's quite complex, as Chenji said. I've done this quite a lot of times, so I'm saying it as though it's second nature to me. But I appreciate how confusing it could be for you listening in. So I would always say to you, look at the investments that you have, and then think about the countries you're moving to. So typically we talk about Hong Kong moving to UK. Think about your products that you have in Hong Kong. Are you going to keep them there, or are you going to transition that money into a UK investment? And I don't think it's always advantageous for you to do so, if I'm totally honest with you.
Sorry, Simon, I promised a personal example. So, I'll give you a personal example to everyone. So for my personal circumstances, I've moved to the UK previously from the US. And so right now, and the US and the UK, some of the most safest and actually most regulated places to invest your money, which I feel comfortable with. So roughly speaking, personally speaking, I have 50% of my investments, for example, in the US, 50% of mine in the UK. Now, in terms of how I manage the tax, luckily for, I don't do any exotic things with my money. They're all invested in normal funds, some companies. And the UK and the US have tax treaties that will prevent you from being double taxed on your investment. So it's quite simple, actually. I have my American investments. When they make any money over there, right, they already pay internal taxes. I don't need to worry about it. When I dispose of them, if I gain a dividend from my American holdings, I declare this in my UK self-assessment under a section of foreign income. Now, one thing I do know, I'm not a US citizen, but just aware if there are any US citizens potentially in this phone call, be very, very careful investing in the UK. There's one specific law in the US called the Foreign Passive Investment Company law, which basically dictates if you invest in a UK-based fund, you basically have very punitive tax charges by investing your money in a very simple thing. It's US being US. So, but yeah, please seek professional advice before you try to do anything. I've made mistakes before, but now I'm all happy because I've actually sought professional advice.
And just to finalize on that point, if you're sitting here thinking, oh, crikey, I'm not moving to the US, but that sounds quite frightening, then you rest assured the UK isn't as bad as the US from a tax perspective, and Hong Kong even more relaxed. So any investments that you make in the UK, would they be taxed in Hong Kong? No. So you just got to think about, well, if you're moving to the UK, just get your UK tax perspective sorted, and that way you only have to worry about one tax system. So it is a bit more simple if you're going from that approach from Hong Kong to the UK. Natalie, a different question altogether. It's a fan favorite, it seems. Shall I buy a property in my own name or in a child's name? And I'm going to position this slightly differently, in as much as what happens if the parent is still in Hong Kong, or if the person or the parent is in the UK as well.
So, well, I just want to deal with the fact that I think when we talk about a child, there's obviously some difficulty anyway, because if it's a minor dealing with that first, a minor, someone under the age of 18, they can't hold property under the age of 18. So in situations like that, you'd have to look at trusts, and we're looking at the law of trusts. So the legal register has to show the adult owning the property as a trustee. It doesn't have to show who the beneficiary is, who the child is, etc., but it needs to reflect that on the legal register. And then at the same time, you'll need to make sure you've got a valid trust deed, which can be complicated, and that's why you need specialist legal advice when drafting those documents. The law of trust, as I said, is complicated. It can be expensive. The way that you'd hold them, it's all very technical terms. There are things called bare trusts, where a child can inherit the property at a specified age. There's what's called discretionary trust, where there's a lot more involvement, but there's no single child, single beneficiary that could be entitled. It's all discretionary, up to the trustees. The point to take away from that is that if you are going to put a property in your child's name and your child is a minor, please take advice. They are not common. We don't do it often. I'm sure it is done, but there are reasons why. And for me, they are incredibly complicated and expensive. So it's just a bit of a note there on that. Dealing then the opposite side of it, the adult side, so an adult child, that's where I've seen it on a personal experience, and also where I've seen it with clients. More likely than the child, a Hong Konger is likely to come over, maybe a parent, and they may want to put their money into a property with their adult child. Okay. In those scenarios, the things that I wanted to mention is that if you put it in your adult child's name, the minute you do that and you're not on the legal title, obviously you're not a legal owner. So by virtue of that, you lose quite a lot of element of control. If your child then goes on to marry, which I have seen from clients as well, that then adds an extra complication, because unfortunately, if that marriage doesn't work, then that property of which you have invested into, that forms part of the matrimonial pot, which could be up for division upon separation. So you could, in the worst case scenario, lose all of your investment. That I have seen too. If your adult child is bankrupt, again, there's some difficulty there, because a trustee in bankruptcy could claw back whatever is owed. So the whole point of it is that if you're not going to have any legal title and you just gift money to your child and put the property in your child's name, adult child's name, then there is that element of control that's gone, and there could be risks that are associated with that. So I just made a little note to sort of say that what you should do in a scenario like that is really think, how do I protect myself? Because the cases that I have seen, Simon, they are substantial amounts of money, substantial. You know, it could be their actual life savings here. So what I would encourage you to do if this scenario applies to you is really to think about what are called prenuptial agreements and postnuptial agreements in the UK. That would then give you some protection where, well, it would give you and your adult child some protection were they to go on to marry. Even if they're not married, if they cohabit and they just live with someone, that person could still make claims. So it's important, if you don't have a prenup and a postnup, to have what's called a cohabitation agreement. These sort of documents are becoming more and more the norm. They are not reserved just for celebrities. You don't have to have lots and lots of money to have them. That's not the purpose of them. They're meant to regulate anything you want to protect. It doesn't matter if we're talking 100,000 or 100 million. Okay. You can also think about purchasing it not solely in your adult child's name, but also as a co-owner. That allows you to retain an element of control. There's also the idea of not gifting money to your adult child, but having a loan, giving them a loan and having that loan formally drawn up by way of a loan agreement. So takeaway is, if you want to put it in the name of your minor child, I really would really get some advice on that. It's not common. There has to be really quite special reasons why you'd want to do that. In your adult child's sole name, please think about how you protect your investment. Insofar as, I think, Simon, your other question was about whether there's a Hong Kong property here. So if they were in Hong Kong, was that right? Have I understood that right? So if the parent lives in Hong Kong?
That's right.
Yeah. So if the parent lives in Hong Kong and they're going to gift their Hong Kong property to their, let's say, adult child, I think that really, it links onto another question I know that's going to come up, but I think that really is quite a financial decision as opposed to a legal issue. I think that the legalities of that would very much be determined by the laws in Hong Kong, and also importantly the tax implications of that for that parent, which could be substantial. So but my question really focuses on, I guess, the UK element of that.
Yeah, I think from a tax perspective, interesting enough, there's no estate tax, so inheritance tax, unless you're going to say I'm wrong, Chenji, but my understanding from the department there's none at all. There is something that's going through my mind, and it was around trust, discretionary trusts. Any thoughts on using those to protect the assets?
Well, I think discretionary trust, that obviously is a lot more involvement with the trustees, as it says what it it is what it says on the can. It's discretionary, so it's not simply up to the child, and the trustee retains an element of discretion. But the point is about trusts in general, they require very, very specialist advice because of the complexity of the documents of trustees, as you probably have seen many a time, Simon. So absolutely, trusts are really, really relevant, and I've seen that in practice a lot, and that can be very effective in certain cases, but it's so case specific.
Yeah. And that's good to point that out. I think it's worth mentioning that there is a vehicle for you to use. From a tax implications, it's interesting when you have two people from two different specialisms talking about the same subject, and that's why I love this type of session, because when we talk about gifting assets from one person to another, so from a parent to a child, there's a couple of things that go through my mind. If it's a home, then there's no capital gains tax in the UK if you're transferring UK property to a child. And the reason I mentioned about capital gains tax is because, again, the call I had just today talked about people gifting assets from Hong Kong between families. No issue, because there's no capital gains tax in Hong Kong. You'll notice me just saying there's no tax in Hong Kong. People love it. People move to Hong Kong. We're going to do a new channel saying from the UK to Hong Kong. But the idea behind transferring assets in the UK is different. We do have capital gains tax, and if the property is an investment and not a home, which we've seen plenty of times before, there is a capital gains tax problem, because you'll pay capital gains tax even if you gift that property over, and it would be based on the market value at the time of the gift versus the purchase price of the property. And many people have fallen foul of that, and it can cause major issues. In addition to that, you've got inheritance tax, because it could be seen as a gift, which will be potentially exempt transfers if you die within 7 years. So it might be recaptured as part of your inheritance tax. I know there's a couple of questions on the live session streaming I can see talk about inheritance tax. So I'll leave that there. But
stamp duty as well, Simon. Stamp duty.
There's no stamp duty on gifts, fortuitously. If you move properties to a limited company, then there will be a stamp duty land tax consideration. But because stamp duty land tax is a tax on the consideration, not the value of the property. So if you're gifting, then the gift presupposes that you're not receiving something in kind. So there'll be no stamp duty, but it's good to raise that point, because it can have an issue if you're trying to do different types of trust structures, for instance, and that can throw, if you said, actually, I want it back within 5 years, then all of a sudden it's a gift with reservation, and then there's all sorts of problems to be had with that as well. But there's a couple of things, and I couldn't help but smile, so forgive my unprofessionalism. But Gary Hands of AMG Wealth, who you know very well, when Natalie was talking, the name Tony Torag came into my mind, because Gary Hands used to talk to me to a length, talking about if you've got to be careful with Hugo, because if Hugo goes with someone else and they separate, they could take 50% of your wealth, because it's part, eventually you'll be passing on to Hugo. So you do need to think about ways of protecting that via prenups, which is what Natalie was talking about. And I just thought it was very fascinating to hear such common language being used, because I think it's very powerful. But Chenji, has he given you that story as well? The Tony
yeah, I mean, the thing is, like, I don't want to dwell on this particular question for too long, but kind of want to add again a personal experience what I do on a day-to-day basis. As a wealth manager, oftentimes people come to me and mistake me for an investment manager. Tell me here's £1 million, just grow it. But the first question I always ask them is, before we talk about growing it, let's say, what's the risk associated with that pot of money? So something that were to happen to you tomorrow, what's going to happen? First of all, potentially you might pay 40% to the taxman. So, if you have 2 children, actually, in fact, you have 3 children. The third one is called Rishi Sunak, who is the Chancellor of the UK. So 40% actually goes to him. So he's part of your inheritance. He's claims part of your estate. Now, what happens next? So your children got the rest of the 60%, divided by, say £300, £300,000 each, and they marry somebody and say, my child, Bob meets Sally, and she turns out to be a silly Sally. And, you know, something happens, and you never know what's going to happen. And I'm sure Natalie can attest the divorce rate in the UK is...
I am a family lawyer.
Yes, so you never know what's going to happen. You think somebody's the right person, but you can't control it, can you? So something happens, you get divorced, 50% of that goes away. So that £1 million turns into 150,000. So there is so many risks associated to that.
Or more than 50% if there was a
more.
need, for example.
Exactly, potentially more. So not only do you have to take care of this extra child in the UK, called Rishi Sunak, or whoever the next person in the line is, and you have to, you know, consider these family circumstances. You have to consider about bankruptcy. You have to consider, you know, all these things will happen. And so, you know, before we even think about growing the wealth, first of all, we need to protect the wealth, and then we can. And once everything is protected, then let's grow it conservatively. Again, you know, we always say your money, the money that you have, your wealth today, you've already paid taxes on. So for every £1 million that you hold right now, you probably would have actually made 1.5 million. So money that you have in your pockets, it's hard-earned money. So protect it first and then grow it.
Yeah. One final point for Simon Hodgson, if you're still there, Simon, was around gifting properties when there's a mortgage on it. I mean, technically speaking, you can't, can you?
No. And also that raises a really difficult question with trusts. If we talk about the complexity that you guys have just covered in terms of the type of trust, imagine trying to get that or explain that to an underwriter and a lender. And you've then got an overseas investor within that structure. So it's incredibly difficult, not impossible, but incredibly difficult to get funding for that kind of thing. And generally, in the T's and C's of your mortgage, if you sign away the beneficial interest, which is generally what you need to do under the trust structure in order for the trust to do what it's meant to do, you then actually contravene the T's and C's of your mortgage, and you shouldn't do it. So quite difficult to do. Generally best done with cash, I would suggest, the trust structure.
Interesting. There's a question. I'm just going to move on to a different subject. Chenji, quite rightly mentioned earlier, we spoke about this quite a lot now. But I'm going to go back to Max. Max is on YouTube Live. So Max, hi, thank you for the second question. This is posed to Nigel, actually. So it says, my mother-in-law was granted a certificate of registration as a British citizen before 1997. But she didn't apply for the BC passport and has lost the certificate. Could she report for a lost position, I guess, of the certificate and apply the BC passport after that? I have no idea the answer to this one, so good luck to that, you, Nigel.
Well, the first thing to say is that if she was registered as a British citizen, then there will be record of that, and the loss of the certificate is not necessarily fatal in terms of retaining the status. Your relative can apply for a replacement certificate. What I would suggest doing is utilising the Home Office subject access request mechanism, which is an online service where you can just put in details and request all the information that the Home Office have on you, and hopefully that will render the information that you're after, and that's your starting point in terms of replacement of the certificate. So that would be my advice in that case as a starting point. Obviously, there may be more issues here, and you may need to get specialist advice to assist you with this, or if things don't come up in terms of the records, to help you.
Okay, that's good. And if you can do me a favor, Nigel, if you don't mind, but if you know the URL for that particular page that they can go to, drop that in the chat box for me in Zoom, and I'll repost it out to the live session so people can grab that. I'll also repurpose that as a separate video as well, just to help people understand that process. I'm going to go free up some time for Nigel just to do that, because there's a couple of questions for Nigel on there. Let's just talk about something else that was on my list to do: inheritance tax. Okay, so how do you mitigate? So again, as I said before, there's no estate tax in Hong Kong. In the UK, we have inheritance tax. How does that work? the basic version of this is that each individual is allowed £325,000 worth of assets, which they can pass on to loved ones, and there'll be no HT. You can transfer assets between husband and wife, no problems, but once you pass away, then it's 325,000 per individual. So if you're a couple, that's doubled up to 650,000. As I explained to my client today, who's from Hong Kong, moved to the UK, actually it is in the UK, any excess over the 650,000 I spoke about would be subject to a 40% tax. So how do you mitigate it? Now, if you have been in the UK for more than 15 years, your worldwide assets would be subject to inheritance tax, because you then get this thing called domicile. Now, there are, what I always say to people, if you're not totally enamored with the rain and the clouds of the UK, and eventually you want to move over somewhere else, then one of the things you could do is say, well, do you know what? I'll stay in the UK for 13, 14 years. So that's before the 15-year clock ticks to make you a UK domiciled. So your worldwide assets are freed up now, so you can go to a different country. But more importantly, why not sell some of those assets in a most tax efficient way into the capital gains tax, and then take that money offshore? So you can then take that money wherever you go. So when people talk about 40% inheritance tax, as Chenji mentioned earlier, it is entirely possible to mitigate inheritance tax in full. There's never been too much of a time when I've had to retract my advice to someone where I said, actually, there is ways to halve, if not quarter, your IHT bill, or even mitigate it altogether. Because one of the reasons why I was looking for America was because the IHT threshold, or estate tax, they call it over there, is so high. It's like 11.9 million or something like that. Well, closer to 12 million, sorry, compared to 325,000 in the UK. So it's a big difference. So from anyone who's moving from Hong Kong to the UK, you do need to think about, well, what is the next phase of my life? Do I stay in the UK and accept that 40% tax will be 40% tax will be applied to my assets, or do I move country? I helped many clients move to different countries, in all honesty, throughout Europe, simply to mitigate IHT. So there are ways around it. Each country is very different. I think England is probably the most aggressive in regards to inheritance tax, and I don't think that's going to change anytime soon. Nigel?
Last thing on that, inheritance tax is a voluntary tax. It is a voluntary tax. There are ways you can do it. Yeah, the easiest way actually is to spend it.
Yeah, or even, one of the things that I did with one particular client was just increase the debt. So they came over, I'm not sure where these guys are from, but they came to the UK and had some money, and they bought all these UK assets. And I said, well, actually, that's interesting. If you just got a 75% loan to value on all your assets, inheritance tax goes away. And then you just take that money offshore. It's like, okay, that's easy. And that's exactly what they did. So you're absolutely right. There are many ways to skin a cat. And for any cat lovers out there, I do apologize for that statement. Nigel, I do want to get over to your good self, because there's a couple of questions that has come back on the questions set from earlier. What are the considerations for family members if I move to the UK under a BNO visa? And I think we've answered a couple of those, but are there any other considerations that when you talk about other family members, not just a person who's got the BNO visa?
Sure. Yeah, there's a few issues here I think that's helpful just to touch on. So there's basically three types of people we've got. We've got people who are BNO holders. Then we've got their, what I'll call their direct family members. So that's their spouse or your partner who you live with for 2 years, and your direct children under 18 who live with you. Now, the third group are, let's call sort of extended family members. And these are adult dependent relatives who we've talked about, but also children who were born after 1 July 1997 who live in your household. These are a special category of family member, so they can be over 18, and they can also apply with you. The last two categories have to apply with you at the same time. You can also include a partner of the over 18-year-old child in that case. Now, all of these people, if they meet the requirements and come to the UK, they'll have the same rights of residence as the B&O holder. So they will have the right to work without restriction, to study, so they can attend schools or university. No restrictions there, other than I think you can't work as a professional sportsman for some reason as the only exclusion. But those are the key things. Now, the other thing, of course, is that a B&O holder might come to the UK and then form a relationship whilst here or get married. Now, they can apply for the spouse or new partner to come into the UK whilst they're here as a B&O holder. That is permissible. Likewise, if you have children whilst you're over here in the UK holding this status, they can be then added to your status. One thing that's interesting to note is that applying for indefinite leave to remain which is a right after 5 years in this category, there are certain family members who can only apply with you. So people have to complete 5 years residence, and then the extended family group need to all apply together with the main B&O holder for indefinite leave. So there are some things to bear in mind for family members when you come over that are not straightforward. And if you're applying for people in the extended categories, then I would get some advice, because there are things like that are very helpful to know, and there are some pitfalls. By and large, if you're coming with your direct nuclear family, then you don't need to be as concerned about the issues, but nevertheless, it's important to understand everything before you come, I think.
Mm-hmm. That's really interesting. And one of the attachment to those question sets, and I appreciate next month we'll do a special section on business visas. We're not going to talk about business visas today, but we'll leave that for next month. But there was a couple of ones for the types of visas that someone could apply for, not just B&O. I guess there are other types of visas that people can come over from Hong Kong to UK, and relating to work and family. Let's just focus on those two, leave business ones for next month.
Sure. I mean, the main other category that people will come over here in terms of work is a work permit. And so, if you've got other family members who perhaps don't fit within the B&O structure and want to come over, one option is for them to be offered employment in the UK by an employer who is able to sponsor them. It's not so straightforward. The employer needs to have a license to do that. So it's generally bigger employers. And they also need to, the person would need to fit within an occupation list. So it's not all occupations. There are limitations. The salary has to be at a certain level. So there's a bit of coordinating involved. It may be something that once a family is over here and established in work and other things, that relationships can be formed in order to manage perhaps other extended family or friends coming to the UK using the work permit mechanism. Now, if someone comes in on that in that category, they're limited to working for that employer. That's one of the beauties of the B&O program, is that there's no restrictions on who you can work for. You can change jobs, you can lose jobs, you don't need to work. Coming over on a work permit, you must work for that employer, and if you don't, that's your visa over. So there are some restrictions, but it nevertheless represents a category in which other people can come in on. There are other family categories as well. And for the person that was asking earlier about the adult dependent relatives, once you've acquired indefinite leave to remain in the UK, then you are treated in much the same way as other British nationals. So you can then sponsor relatives to come in, whether that be partners or adult dependent relatives. And so there are a number of other categories there that will open up. They tend to mirror the relationships that the B&O focus on. But nevertheless, you will now move into another category where, your children, if they, for instance, grow up here and they want to marry someone back in Hong Kong, then they will be able to sponsor their partner or their spouse to come and live with them in the UK and settle here. There are rules governing that. There are financial requirements. English language requirements and so on, but by and large they are attainable by most people, and they will facilitate for future partners of settled people to come here.
Quick personal take, Paragon Law, I'm on that work visa permit actually at the moment, and Paragon Law have helped me tremendously in that process. It's not simple at all. It looks very simple, but you have to satisfy very strict requirements, and that's when you engage with Paragon to make sure every single bit is crossed off the right way.
And just to add on, Max has said online as well, thanks, Nigel. Your video is awesome. So there you go, Nigel, just to give you that feedback. Now we are coming to a close. We do need to finish at 25 past today. So I'm sorry, guys, that we've answered every question pretty much. I know that, Joe, you've been asking questions about inheritance tax. I think we covered that to a large degree. So do rewatch that. You talked about, so one bit I didn't cover off maybe was the assets that are in Hong Kong, which are owned by your parents and then gift to you in the UK. Would that eventually be subject to inheritance tax? The answer to that question was answered, but just to clarify, if you become domiciled because you stayed in the UK for more than 15 years, then your worldwide assets would be subject to inheritance tax. So sometimes I would say maybe you need to rethink about that property. As Chenji said, let your parents spend it, and let's then reap the rewards of their hard efforts.
There's other ways, of course. You don't have to spend it. So we know, like as a Chinese person myself, we don't like spending it. Let's just be honest.
Workaholics as well, I've noticed. So yeah, so that side is good. Chenji, there was a question posed, do I pay any taxes in the UK if I move to the UK and have rental property in Hong Kong? Did you want to pick that up? Are you happy for me to just run with that one just quickly?
Yeah, I mean, I think the short answer is if you're a UK resident, you get taxed on your worldwide income. And yeah, that's a simple answer. But, please elaborate, Simon.
No, I think it's an interesting one because I've had several calls on this subject where someone's come over to the UK and said, do I need to be taxed on my worldwide income? It's not like the IRS in the United States. They would tax you on everything. They would tax you on your own children's earnings, never mind your own. But the HMRC are a little bit more lenient. So they do offer you this other scheme, which is called the remittance basis. So, for the first, I think 7 years, you don't have to pay tax on foreign earned income at all. You would be taxed, income tax would be suffered on any money that you remit to the UK. So one of the pieces of advice I've got for people is if you have got business or properties in Hong Kong, leave the money there. If you think you're going to go back there at some point, why bring it over to the UK where it would be subject to income tax and leave it in Hong Kong? And then think about your plans in 5-7 years' time to say, well, do I need to change what I'm doing? So the first instance, I would say that, then book some tax consultation with me. But listen, guys, this has been a really, really enjoyable session. The time, as always with these sessions, flies by. So thank you ever so much for everyone listening in. I think we had about 10 people on YouTube Live, which I knew would happen. I know that you're going to be watching this after the event at night time. So what I will do is I will put down in the description of this video the contact details of all the panel members. I will also give you a list of ebooks that you can download and our checklist as well. So hopefully that will be useful, but we will also be putting dates for our next session as well. So from me and all the other panel members, thank you ever so much for tuning in, and we'll see you again next month.
Thanks, Simon.
Thank you, Simon, Natalie, Nigel, and Simon Hodgson.
Thank you all.
Thank you very much. Goodbye, everybody.
Bye-bye.
See you next month.
Bye-bye. See you next month.